What's up guys, it's Paul here from the 9 to 5 Investors Club channel. In this video I want to show you how to roll over options, especially when you sell a call against a spread or even as a covered call. Okay, so to give you a little background, in my previous video I showed you how I sell covered calls against stocks that I have 100 shares of, and it becomes a very consistent way of making monthly income. But sometimes if the stock starts shooting up too much to the point where it starts reaching your short call or your covered call, then you either might get forced to sell your shares if it's in the money by expiration, or if you don't want to sell your shares, you can choose to roll it over to a higher strike price for a later expiration, either pay a small cost for it or even sometimes get a credit for it, and that way you're pushing it to a much higher strike price so that you're giving the stock more time to maybe go up and pull back a little more, and on days when it pulls back you can buy it back. Okay, so the way it works is, for example, Palantir is at 36.62 right now. My average cost is 26.05, and so I have this $45 covered call here that expires on March 19th, and I got an average credit of 608. Since Palantir actually dropped since I sold this, the value actually shows that it's up on it, but in reality I need Palantir to actually stay below 45 before expiration for this call to expire worthless and get to keep the full $608 initial credit. Okay, now if I were to close this, I would have to pay $323 to close it, and so I will essentially be walking away with a net profit of $285. But ideally I like holding until expiration, assuming the strike is really high above where Palantir is currently trading, which is 36.62. That way I can keep the full $608. Okay, but let's say over the next 2 to 3 weeks, or even by beginning of March, Palantir starts shooting up and starts getting to $44-$45, and I don't want to sell my shares at 45. The way I would do this is I would go to view all options, go to my expiration here, which is March 19th. I would choose the call that is sold, which is $45 here, so I would buy it back first, and which would cost me about $325. And then what I would want to do is choose, say, another month out, and I would sell a call at a higher strike price. Okay, so instead of 45, let's say I expect Palantir to stay below 55, just to be on the safer side. So this would cost me $58 to roll it over, and considering I got an initial credit of 608, now my net credit essentially dropped from 608 to $550, which is 608 minus the 58 I have to pay to roll it over to April 16th 55 strike. Okay, so my net credit is still around $550, which is still a profit, but now I'm giving enough room for Palantir to go from say $44-$45 all the way to $55, which is a lot less likely that it will shoot up that much by April. Okay, so that's exactly how we roll options over. In this case of Palantir, I'm hoping I don't need to do it because 45 is well above where it's currently trading, but in the next month or so a lot can happen. Palantir is a pretty fast moving stock. When it does move, especially this morning, it shot up over 15% on partnership news with IBM for their AI applications. And so anytime a news like that comes out, Palantir has a way to shoot up really quickly. So that's what I'm trying to keep an eye out for, and if it does happen, that's how I would roll it over. Okay, and to give you another example here, let's look at Mara. Mara ran up like crazy today after news came out that Tesla bought $1.5 billion worth of Bitcoin. Bitcoin shot up like crazy. It's at 47K right now, if I'm wrong. And Bitcoin mining stocks like Marathon Patent Group, Mara, or Riot Blockchain, they have shot up like crazy. Okay, so this is up 42% today and seems to be up another 12.5% after hours. This is a great stock that I want you guys to watch actually, because if you look at historically, last time Bitcoin was at higher on 19,000, Mara was still at 49.60, and usually Mara and Bitcoin on a Riot Blockchain, which are Bitcoin mining stocks, they're actually following Bitcoin's price very, very closely. Okay, so if the correlation were to follow, when Bitcoin crossed 19,600 or 20,000, Mara should have been at 49.60 by then, but the fact that it's lagging so much actually shows you how much more upside there is. Okay, so if Mara goes back to 49.60 or $50 approximately, that would match up with what Bitcoin was trading at when it was 20K. So that actually means, to me at least, that with Bitcoin being at 47, Mara can easily go up to 80, 90, or even $100. Okay, with Riot Blockchain on the other hand, I'll show that as an example, but Riot Blockchain's previous all-time high was $28, and as of today they're at 32 or 33, which means they are a lot more closely following Bitcoin compared to Mara. Okay, so this is definitely on my watch list as well. But getting back to rolling over options, for example, I have the June $30 calls here. They expire on June 18th. As you can see, my average cost was $665 and the strike price was $30. It shot up like crazy today, a total of 129% overall. But here's where it becomes a problem. I did sell a short-term call, a 38 call expiring on March 19th, and I only got a credit of $375, which is why it's showing you that it's down so much. Okay, I actually sold this yesterday, which is why with Mara going up so much, this option is actually showing that I'm down 85%, because now the stock has shot up, and so when you sell a call and the stock shoots up, you actually go down in value. So that's exactly what happened here, and it's already getting too close to my short call here. So since this expires a month down the line and Mara is already at $36, if I wanted to roll it over, there are two ways I can do this. So I'll go to the expiration here, which is March 19th. I would have to buy back the 38 call, and I could choose the same expiration, and instead of 38 I could sell the $40 call, which wouldn't make sense because, if Mara is at 36, ideally I want to push it up another $10 to $20 considering how much Mara moves. But the thing is, Mara was not this high previously. It hit recent highs, a recent 52-week high, which is why the option chain is only till $40. But tomorrow I'm expecting newer options chains to show up. Maybe it may open up till $50 or $60, and then I could choose to sell a $50 call or a $60 call, or I could even go a month out or maybe all the way to June, and now I could sell a much higher strike price whenever it opens up. Okay, so that's what I would do on Mara. Or if I really wanted to, I could cut my losses right here. I'll take the $640 loss on this and just hold on to the June call, because by June there's a good chance Mara can easily be a $50, $60, $70 or even $80 stock. And even though I take this temporary $800 loss or $640 loss here on Mara, it wouldn't matter because I would more than make up for it with the June $30 call. Okay, so that's another option with Mara. I was talking to you about Riot blockchain. So with Riot, it's at $36. Wow, up another 9.8% after hours. Last I saw it was 32 around market close. And so to look at the history, they were around 2850 as I mentioned when Bitcoin hit around 20k. And as Bitcoin is shooting up to all-time highs, Riot blockchain is following closely, and that's exactly what's going to happen with Mara as well. Okay, so with the same thing with Riot. Unfortunately, I sold a $30 call way too soon, so I could either choose to roll it over similar to what I did with Mara, or I could buy it back with the loss, because I still have these June $15 calls which are up 443%, and even Riot can keep going to $40, $50, $60 by June, so I could potentially do that. But if I wanted to roll it over, again same as before, I would go to the expiration date here, which is March 19th. I would buy back the $30 call, and again, as you can see, even with Riot, it's only up to $40. So tomorrow new option chains are going to open up because Riot shot up to $36 right now, and then I could either roll it over to March 26th or whenever April opens up, potentially even sell April calls. But that's exactly how we roll over options. Okay, rolling over is a very, very common strategy that you should always keep in mind, because that's an essential part of risk management. Anytime you sell a call that's getting way too close to the strike price that you sold, and you're at a risk of either getting assigned to sell your shares in a covered call, or you're actually your spread is kind of working against you because it's getting too close to the short call and you sold a credit spread, it's very, very important to roll over your option to minimize your risk. Okay, sometimes you can get away by paying very, very less, like in the case of Palantir that I just showed you, where you're only paying $58 to roll it over by $10. But in the case of Riot or Mara, there's a good chance I have to pay a lot more to be able to roll it over. Okay, so keep track of it. Keep track of how much initial credit that you got versus how much you may have to pay to roll it over, and that way you're making sure that you're not actually losing money on it, and rolling it over in such a way that it can still expire worthless and you get to keep all the credit from it. Okay, so that's all I wanted to share with you guys here today. I hope this helps you out. Please just smash the like button if you did. Leave a comment below if you have any further questions, or if you want me to go into more detail, I'll be more than happy to make another video for you to get into more specifics if there's something that you didn't understand. And be sure to subscribe and hit that notification bell if you haven't already. Okay, thanks again for watching, and until next time.